there's two nice things about intangible assets versus tangible assets, factories or mines or everything. The first nice thing is they're much more difficult to imitate. So it's relatively simple to build another factory or dig another hole. It's very difficult to build a brand which competes with a brand which has been around a century, which has spent a century advertising year after year after year and building links and relationships with the public. Or equally, if you have a network that everyone's using, it's very difficult to break into that. That's the first reason that they're more sustainable and less easy to imitate. The second reason is, if you've got intangible assets, you're likely to have much higher returns on capital, because you don't have to spend all your profits in digging another hole or building another factory. What's nice about high returns on capital? It means the earnings turn to cash, and cash is what you can actually buy stuff with. If you are a physical business, a mine or whatever thing, the return on capital is lower. If you're growing, your earnings will disappear into capex, and you won't get as a cash. And cash is what you can buy stuff with. I think to understand the value of pricing power, you've got to realize what happens if you don't have it, and it sucks. So in Australia, you'll be familiar with the iron ore price heading up and down and the effect it has on the big iron ore company, big materials companies here. Oil goes from 125 to 25. They're powerless. You're a price taker. You just have to suck it up, basically. So if you've got pricing power, your input costs change, you pass it on, and maybe you can improve. And I'd point to the spirit sector, the likes of Pernod Ricard. And there what you find is, where your costs change, maybe the taxes rise, they have a very good record of passing on, very stable gross margins, even if the input costs move a bit. And in addition, as they move steadily to more premium brands, the horrible verb, premiumization, they're able to steadily increase their gross margin. I think that's a very good example of pricing power in action.